Jamie here. Hope everyone's doing outstanding. Tuesday, June 24th, 9:02 a.m. I talk really quick about the market. Some names I'm looking at go from the S&P futures to the upside. So the big escalation of tensions, markets pulling to lows in early afternoon yesterday, and then boom, all the way down under 593 for a minute on the SPY, and then off to the races. And then after the close, you had President Trump saying there was a ceasefire with Iran and Israel. And then that's, I wouldn't say that's all she wrote. Interesting enough, there's a fat finger here on the SPY, 588.79 to 4 a.m. But anyway, so we'll see how things play out. I hate to say that that's over, but I put it on the watch list like that's the next wall of worry, concern that we put in the rearview mirror. Hopefully it is. And it's funny. It's like, even if you read the headlines over the weekend, you would think that apocalypse is coming. Get the bomb shelters, you can go out, get the milk and eggs, and go hide for a while because World War III was coming. Hey, I'm not saying dismiss things, right? You always need to have cautious, have to be cautious about things. But you took a look what happened on Sunday with Israel's markets hitting all-time highs again. And then yesterday, we had that news come out at about 12 o'clock, and oil sold off despite the reports that Israel's missiles were going into U.S. base in Qatar. Just, remarkable stuff. Just kind of show me. I put it in the chat room before everybody else put it on FinTwit or New York Times did their article. I said, this is eerily similar to 2020 when the U.S. assassinated via drone that general from Iran in Iraq, and then 5 days later, Iran sent missiles to the U.S. bases. But it's like it was almost like, I wouldn't call it staged, but it's like we knew it was going to happen. It's like, okay, Iran, you want to save face? Let's not escalate this and move on, right? So we'll see how this all plays out. I mean, overnight, you already have people, especially the people who are bearish or just don't think that the market can head higher with the tariffs and everything going on. Oh my gosh, the ceasefire has been broken. You would see the headlines and you look at the future like, well, futures are still solidly higher. To me, I think it's just the premise that there could be some kind of agreement in the Middle East is like a bullish thing, right? I mean, how many? It's always if you Middle East is synonymous with conflict and no cooperation, no peace. No, it just hasn't happened. So like, what if this is the moment where, hey, maybe there's going to be some kind of peace? And then not only that, will that spur the next leg of growth? So I hate to, make do all that stuff, but I'm just like, that's what the market kind of looks like it's doing. But we'll see how this all plays out. Hopefully, and I say war is horrible. So hopefully no war, no more casualties, no more any of that stuff, and markets can move on. I made my little joke yesterday. Gosh, seemed like yesterday, the COVID. I posted about the conflict, and the way it ended in 2020, and of course COVID happened right after that. So like, is there conspiracies that Iran was involved in COVID? But Chris Christie, I remember him being at a beach in New Jersey while he told the public can't go on the beaches, and then he was on a beach enjoying the public beach all by himself. All right, so now that's overall markets. Take a look. 594, 595.25 to 604.25. We're right here at 604.25 in the pre-market. So now you guys think you got to move up that trading range. I think we head over 610. And then I was putting on the watch list too. It's like I wouldn't even call it consolidation because it's been a decent range, 586 or so to 604. But we've been doing that for the last month or so. You have to think the consolidation, the longer the base, the higher in space, they say, 620, call me crazy, into the summer. And then maybe we get some more volatility. So that's kind of what I'll be watching. And then also, if you had on your bingo card that if the U.S. attacked Iran's nuclear facilities, and Iran sent missiles back at the U.S., what would oil prices look like? And everybody would say $130 oil. That's what they've been saying. And oil was down 9% yesterday and down more today. So not only has this conflict removed some of it's de-risked that whole area, in my opinion, but it also, you have all those folks, oh no, inflation, because oil is a big part of not only the consumer products, the plastics, transportation, all those things tie in with oil prices. So the higher oil prices, obviously, it gives a great narrative for these folks to say, oh no, here comes more inflation. So boom, took another one of those headwinds away. All right, so that's that. Today, Fed Chair Powell speaks in front of the House. I think it's the Banking Committee, and then tomorrow's the Senate Finance Committee, or maybe have it backwards. Here he came out with his prepared remarks. The market didn't do anything after his prepared remarks. And then at 10 o'clock, they'll have his testimony, and it'll just be politicians trying to look smart, asking Powell loaded questions. That's what it is. And tomorrow's going to be the same thing. I almost watch it with, get some popcorn, watch it. It's almost like comedic relief because you watch some of these questions. And a lot of times they ask questions, they don't even know what they're asking the questions because they don't know how the Fed works. All they know is cut rates, right? They don't know about all the things they do, what they've done in the past, what they have impacts on, and sometimes you get Powell kind of like correcting them on stuff. It's kind of funny. All right, that's overall markets. And then, of course, what's happening over the last couple of days, yields have been ticking down a little bit. So hopefully that trend continues. You already have Trump early, I think at 4 a.m., he was saying Fed Chair Powell's got to cut rates. But if you take a look at the CME Fed tool, the probability of rates getting cut at July meeting is starting to uptick and also into September. So I think it was like 40, 50% for one cut for September. Now it's like probability is going up by 2 cuts by September. And then there used to be a decent amount of probability that there'll be no cuts this year. And the December is like a 5% probability of no rate cuts. So now that all this stuff is getting taken out, now it's, I mean, eyes are back on the tax bill and tariffs. And hopefully those things can get worked out. We get some more deals. Economic data remains strong, and then maybe we rally up to 620 on the spot. All right, so now just individual names. Lemonade, tough one to stomach, right? Because my calls are green heading into the weekend. Then we have all this conflict. You're like, oh gosh, I'm not going to be able to get out of my calls. And then boom, at the open, it's somewhat green. It dips into red under 43 for a second. Then at 9:37, it's like someone hit a button. Boom, $43 all the way up to nearly 47. Was able to close some of my July 11th calls for 100% and the July 18th for 100%, and I just held the rest. And then sure enough, we had the news in the afternoon, so everything got kind of pulled down. But then it bounced, closed at 45.79, and here it is. It was 47 in the pre-market. Hopefully it's a gap and go here today. Would not be surprised. They do it. It seems like the Bears sense an opportunity every morning, huge short interest, so they try and instoke fear, and it looks like they do it at the open, right? And if there's no buyers come in, they just keep pushing and pushing, pushing. Yesterday they tried it, failed. Hopefully another one of those failures, and it takes over $50. So I'll continue to hold my July 11th and 18th calls. I'll probably lock out the July 11th at some point this week just because of the time factor and just hold those July 18th. Dell took a breather yesterday, was up 9% last week, down 1% yesterday. Like to see it over 120. It's hanging right here at 120 in the pre-market. Gets over 120. I'll probably look for some more strikes here. I think it heads over to the 139 gap fill at the end of November. Still holding my July 130 freebies. I wish the premiums would creep into those, and it hasn't been. Even with the 1% down day, they took a 25% hit yesterday. So they're still green. But I'll continue to hold those and then might look for some more shorter dated strikes if it breaks over 120 today. I was looking to get AVAV calls yesterday all the way from 198 to 191, then bounced into the 1 o'clock hour, then back down. Premiums are expensive. I was looking at 230s, and then I realized that they report earnings today after the close. So I'll probably wait on that one, wait for them to report earnings, and then revisit. Roku's back here in the green here this morning. Odd, it was down $78 overnight last night. And then yesterday it opened kind of green and back down to $78, rallied to nearly flat. And then, maybe hopefully a gap and go here today. Still like this one for a move to $100 in coming weeks. And then some other names. Pool's back on the radar here. I was watching a couple weeks ago. Didn't play out. Now you start looking at premiums are less. When I was looking at it last time, the premiums were expensive. 330 strikes were very expensive. Now they're not. And here it is, obviously a seasonal time frame for them that's typically would be bullish. You also have yields are going down. So as rates go down, that usually bodes well for folks looking to renovate, build backyards, get a pool, renovate a pool, replace a pool. So not only that, you always have that, on the back burner, that Berkshire Hathaway stake. So, and they keep increasing. So that's always a bullish sign. And then still watching it serve, similar to all the other names. It was looking great in the morning, all the way up to 1070, and then boom, 11 o'clock, 12 o'clock, sold all the way out off. Broke under 10 for a second before bouncing. Still watching the 200-day moving average, 1047. It's over that right now. If it holds that, again, I think this robotics team, it's still kind of like it's early innings. So don't be surprised I had some strikes there. I keep looking at it. And then last but not least is Teladoc. Gosh, Teladoc was one of my top 5 stocks back in the day. I loved the story. It was a big COVID name, obviously. And then it kind of fell on hard times. And you had, a big short report a couple months ago. As much as I would love to chase this one, and I know Citron Research was bullish at $11. Then he, was turning around for the last couple months. Bullish again here, trying to pump it yesterday. Looking great here. I'm 950 or so. That's a key spot. It breaks that. It's off to the races. I just don't want to be in too much, and it's kind of one of those. I still have some negative memories of it from a couple months ago, back in March, February. So I'll probably just sit on the sidelines on that one. But certainly a good story. Trades less than one-time revenues, right? I think it's $2.3 billion in revenues, $1.3 billion market cap. So even if trades and one-times revenues, you're looking at a solid 40-50% gain from here. All right, that's it, folks. Let's have a great day. I'll be back on audio later. Rock and roll.